everyone. Welcome to another episode of Cryptocurrent. Your host here, Richard Carthon. And today I got a very special one for you. We have an amazing project that is just hitting and becoming really cool, that it is transforming digital assets markets using artificial intelligence. And today we have Ahmed, who is the Fluid founder and CEO. How are you doing today?
Hey, how are you doing, Richard?
I'm doing amazing. Appreciate you spending some time, especially with the time difference out there being in London, but glad we were able to find some time to speak today. Before we find out more about Fluid, first I want to learn a little bit more about you. Can you give us some background on yourself?
Sure, yeah. I'm a founder of Fluid, president, CEO. Prior to that, I'm also the co-founder of a company called HAYVN, which is a regulated custody and OTC trading platform based in Abu Dhabi in the UAE. And also I was on Wall Street for about 15 years.
Wow.
I was with Jefferies, I was with Merrill Lynch, and I was with Credit Suisse.
So a lot of background in traditional finance and spending a lot of time in the ways of Web 2.0 finance and somehow made the transition over into Web 3. So kind of tell us a little bit about that. Like, how did you first hear about crypto and what made you decide like this is the direction you now want to go with in your career?
Yeah, sure. So I was at the time the Jefferies Middle East and Africa CEO. So I was their youngest regional CEO for about 4 years. And in investment banking and TradFi, what I could see was a world that was in structural decline. It was harder as a banker to make money. A lot of the stuff was just didn't make sense. At the same time, when I knew the writing was on the wall for the industry, which is, becoming more and more so evident, I saw that there was a massive gap in the market for, while Bitcoin was traded and you could see CNBC, you could see the Bitcoin ticker on CNBC, and this is back in 2017. No one was looking at how institutions trade crypto. No one was looking at how institutions can even get access to crypto. There was a huge amount of lack of education in the sector from the TradFi community. And this is where I saw my mission and vision to try to fill that gap. And so I got together with an ex-colleague from Merrill, which is called now Bank of America. So we got together with him and we founded HAYVN. We got it branded. We made all the mistakes, and we got off the ground. And now it's the first and largest OTC and custody platform in the whole of the Middle East. And obviously, the Middle East now, as you know, you see a lot of news flow around, Dubai and Abu Dhabi. It is becoming quite quickly the global center for cryptocurrency. And they have one of the most advanced cryptocurrency regulatory frameworks, which I actually also helped to write.
Which is pretty amazing. And just for the audience and even for yourself, when I started my professional career, I was actually at Merrill Lynch. So interesting that we both have ties back to that. But as you were looking into this, you hit on education. And I agree that that's the most important aspect of all of this is to have proper education on what the opportunity is in front of us. And I think a lot of institutional players are still getting up to speed on the educational points of this. But by you being able to lead TradFi, come into this space, start HAYVN, and now starting Fluid, how has that educational journey been to help guide what you are now building over at Fluid?
It's a great question because I see that the world 5 years ago is very, very different to the world today. In five years ago, you had, I guess, two opposing viewpoints. You had the crypto OGs, the anarchic libertarians, right, who want decentralization, who want no regulation, and you had all on the other side of the spectrum. You had the call it the boomers, right? The guys the bankers who didn't believe in this magic internet money stuff. And there I saw the gap. And effectively, you need someone to straddle both worlds, the old world and the new world. The old world isn't that bad, right? Regulation is and regulatory compliance protects everyone. At the same time, it's bad regulation that stops companies progressing forward and doing business. So, initially getting a regulated platform meant that you had to speak both languages. And it's actually the best way to educate, traders, bankers, guys in that old world about this new world. And transitioning now into Fluid, I see that we're in a completely different environment than we were 5 years ago. Institutional players are effectively trading crypto. There's Goldman Sachs and Deutsche Bank both have cryptocurrency research desks. I mean, they can't yet custody crypto, but the world has changed and institutions now are pouring in. And despite the market that we're in right now, and the fact that a lot of people got burnt, the world that we're in, institutional education is a lot better. And so, it touches now on, there are new challenges in the industry, and it's not just education. I think one of the biggest challenges, especially in DeFi, is liquidity.
Yeah, I agree with that. And from 17 to now 5 years in, you're definitely seeing a ton more divisions in traditional finance that are starting to open up crypto arms so that they can be more adept in being ready for the new opportunities and waiting for that regulation or that moment where they can flip the switch and really start pouring even more heavily into the space. But to your point, one of the major issues that we're continuously seeing is liquidity, especially as it relates to DeFi protocols. If you look and see what happened with Celsius, Voyager, and some of these others that are starting to go insolvent, it happened that they over-levered themselves and dried up all the liquidity, and now you basically are stuck. And it's a major challenge. And what do you think are some things that can be put in place to help solve this liquidity crisis?
Good question. I think it's just the fact that this industry is so nascent. If you look at the whole value of DeFi, and I think the CEO of Pantera put this out there recently, it's only $20 billion. If you look at the size of TradFi, it's $3 trillion. Huge. Nice. And so there needs to be growth in the industry. Now, the problem is that also, as a trader, while you get to that growth, while you go through that growth, one of the big problems is that liquidity in a crypto space is highly fragmented, meaning that liquidity stays in a few hands, and it's basically the big exchanges, right? Why is Binance, for instance, owning or holding most of the governance tokens in most DeFi projects? And the reason is because most people trade on Binance, right? Now, what we created at Fluid was what's called a liquidity aggregator to try to solve this problem. So a liquidity aggregator is effectively like an aggregator is an exchange of exchanges. So if you buy, in layman terms, if you use Expedia or Skyscanner to book your flights, that is an aggregator of travel products. Right. So we're doing the same. We're bringing all that liquidity together in one place, and we're giving you what's called best execution. Now, anyone can do that. Anyone can have a bunch of APIs and build that. But building that, putting that liquidity together, there are various complexities. And to actually get the best liquidity and to drive liquidity to get real liquidity into the system, you need to solve for the gaps. Meaning, I need to be able to trade on Binance and Kraken really, really quick, right? And I need to, there's latency. So by the time me sitting in London I send a message to a server in, I don't know, Hong Kong, right? I've just lost some time. Time equals risk, pricing risk, which means that your spreads are wider. Wider spreads equals lack of liquidity. So you're fighting against latency and you're fighting against gap risk, right? That's where we are right now. And what we're doing is that we are using AI and deep learning, and we can go into this in a lot more detail, to try to solve for that latency gap by predicting it. Predicting this latency, it's only a few seconds. But you need to predict it with very, very high accuracy. And so much can happen in crypto in a few seconds, as we all know.
Absolutely. And for your everyday trader, especially for someone who's day trading and our high frequency trading, like you're saying, it's bringing on an elevation of risk, but also money. Like you really are losing a significant amount of money over time, especially as it relates to liquidity standpoint. You have these people who are trying to make solid moves, but because they are they can move the market. And by moving the market, you're now making your spreads that much thinner. And there's so many levels of complexity when trying to potentially make a pretty significant trade. So Fluid is helping to solve that latency issue and is helping to aggregate everything in a quick and fluid manner.
Yeah, hence our branding. But yeah, exactly. That's it. It's pretty simple what we want to do. But to solve it is not so simple, because it requires a lot of heavy investment in ultra low latency architecture that exists and doesn't exist in crypto yet, and also AI. So our devs, our team, our technical team come from that TradFi background, and crypto liquidity is about 20 years behind, even though it's so new and cool, right? Liquidity in crypto is about 20 years behind liquidity in the equity space, FX space, or the commodity space, the TradFi space, if you like. And so what we are doing is Fluid, is that we're bringing back or bringing through a lot of the key core concepts from a tech perspective. So smart order routing, for instance, ultra low latency technology, and couple that with AI and deep learning to basically bring a very, very solid, I was going to say solid, Fluid, the pun, but a solid product that can effectively have zero latency, right? And be able to look into the future as well and monetize. So if you can predict using your AI what's going to happen in the next 3 seconds, not only you're able to eat into the latency, but if you know what's going to happen in the future in the next 10 seconds, of course you give best execution, but you also trade against that. You can kind of sort of be a market maker, and a very, very good market maker, because you know what's going to happen in the market. So yeah, I think what we are trying to do is pretty groundbreaking. It's pretty cool. It's pretty exciting. And really, it's virgin territory.
Yeah, I mean, the fact that y'all are trying to combine a ton of different things, from spot trading, derivatives, margin trading, a community treasury, tokenized markets, and this crossing engine, which is kind of a proprietary thing that y'all are building out. It's a lot. It's a lot of complex things to have to build out. But like you said, you have the team to do that. Can you kind of speak to the team that you were able to create to like help make sure that all of this is able to truly come to market?
Sure, yeah. We have a head of product, one of the first guy, well, one of the key guys at Bloomberg. He's been building electronic trading systems for the last 20 years from a product standpoint. From a tech standpoint, Waleed Risk, he is, again, 25 years experience building electronic trading platforms for the likes of Goldman Sachs, JP Morgan, UBS. And underneath him, we have like very elite devs, senior devs that know how to work with data, market data very, very well. We've also, on the AI side, it's another big investment we've made. We have a head of data science who is Professor Lawrence Hennessy. Now, we run with we partner very closely with the academic world here on the data science side. So we have two academic R&D partnerships. One with Imperial College in London, which is one of the top. It's like the MIT of the UK. Yeah. And the other is Blekinge Institute of Technology, in Sweden, which is one of the top universities in the world for software requirements engineering. So with those two partnerships, we have a team of 15 postdoc students and academics who work very closely with our engineers to put together AI algos that encompasses a hybrid of subsets of machine learning, i.e. deep learning, recurrent neural networks, long short-term memory. So a bunch of different algorithmic or AI disciplines in one hybrid model that basically analyzes a bunch of features. So it doesn't just look at the quant stuff that most of the quant shops look at, which is things like what is the Bollinger Bands or MACD or the simple sort of quant stuff, candlesticks, etc. That's kind of what we call a feature. So in AI, the data is fairly unstructured and non-linear, right? Crypto markets are susceptible to stuff that goes on Twitter. Someone says something, crypto markets move, right? It's got nothing to do with what happened historically, but it's got to do with what's called sentiment analysis. So this is another aspect that we look at. We look at, deep learning on what goes on in Discord, what goes on in Twitter, what goes on BBC News or CNN that influences crypto markets. We look at different features. That's one feature. The quant stuff is another feature, but also things like what's going on in the price of gold. And we chuck all that data in. We've got loads of data that we chuck into the algo, and then all of a sudden, that algo can easily understand. It pre-processes the data, learns, and is able to predict. Now, here is the really cool bit. We're able to predict cryptocurrency prices for up to 30 seconds ahead of time with a 99.5% accuracy.
It's pretty insane.
Yeah. So not only are you able to give best execution and do all the latency stuff, but you're also able to use that to trade on a proprietary basis. So this stuff is gold dust.
Yeah, I mean, it sounds really exciting, and you got the team in place to keep building out some very proprietary type of information and data. So for someone who's listening to this right now, they're like, "Wow, I really want to learn more. I want to see how I can participate or use this once it's ready to go." Obviously, they can go to fluid.finance, but what are some other ways that they can engage and start to participate?
So we can buy the Fluid the Fluid token is not yet live. We did a fundraise earlier, so once that Fluid token goes live, you can buy the Fluid token, participate in our communities. So, interact with our sort of Telegram groups, etc. But also, we're going to be releasing various sub products for Fluid. So there's going to be a retail product, which has a UI, and you'll be able to use the product there, and use your token to offset that against fees on the platform. It's a bit like, BNB on Binance. We have a product also for institutions, and we have a product for exchanges. So we have three main kind of pillars of products.
Excellent. Well, for anyone who's listening and you fit in one of those buckets and want to find out more, again, you can go to fluid.finance, get more information, and also make sure you go check out and engage with the various audiences that they have. But as we kind of wrap up here, Ahmed, I always like to finish up with two fun questions. The first being, with all the information that you have learned over the past 5 years, if you go impart 1 or 2 pieces of wisdom to yourself when you first got started in this space and you were building out HAYVN, what would you tell yourself?
Never give up, ever. Just keep going. If you fall, come back stronger. And you're going to get stuff wrong on the way. And that's okay. Never be too hard on yourself.
Yeah, those are 2 great ones. Never give up and don't be too hard on yourself. You learn as you go, and you just have to have the resilience and the conviction to see it through to the end. So definitely appreciate that sentiment. But as we wrap up here, what is a final thought that you want to leave with all the listeners today?
Well, so thank you for doing that. I'd say this. I think the number one, the biggest problem in crypto is just on the cusp of growth. We haven't seen any of the growth, especially in the DeFi space. We're looking at an industry that's only worth, at the moment, $20 billion. That's nothing. Whereas if you look at the TradFi market, it's a $3 trillion market. We're pretty bullish at these levels, and you should be too. So I think the whole space is pretty exciting. And I hope that we are trying to solve one of the biggest challenges there. We become very, very big ourselves.
Definitely. I think that's a great final thought. And again, I definitely appreciate you spending some time with us today. As a reminder for everyone listening, make sure you go check them out at fluid.finance. And as always, for everyone listening, stay cryptocurrent.
Thank you for joining us for another episode of Cryptocurrent. Cryptocurrent is a cryptocurrency and blockchain education platform that's bridging the gap between the curious newcomers who are just discovering the space and the thought leaders who are shaping its future. All opinions expressed by Richard Carthon, the Cryptocurrent team, and their guests on this show are exclusively their own opinions. This show and any other Cryptocurrent production is exclusively for informational purposes.